been very vocal on Twitter, usually, on how these battles are going. You've been pretty quiet. How have the meetings gone? Have you won anything?
So it's always nice to aspire to break news on a conference like this, and it so happens that the fund that has gotten the most of my attention, which is called BIGZ, B-I-G-Z, just had the voting close at 11 o'clock. So I can say preliminarily, I didn't count the votes, but they've announced it, that actually all the Saba nominees, there were 7, got more votes than all of the BlackRock nominees, and 4 of our nominees got more than 2 times as many votes as BlackRock, so more than 2 to 1. And when you win an election by 2 to 1, the voters have spoken. You know, we all know landslide is like 60-40, 58-42. If more than 2/3 voted one way, you know, BlackRock can no longer say that they purport to speak for the shareholder and try to create some divisions. The shareholder has spoken. We won. And the reason that there's been litigation, it's been outward, it's us to them, is because they have put in place election rules that would make Vladimir Putin blush.
Now, I want to read you BlackRock's statement because, of course, they have fought back. They have not let you just attack their funds. They said that BlackRock and the fund's boards remained focused on delivering value for all shareholders through concrete actions such as increased distributions and discount management programs. Saba is an activist hedge fund looking to arbitrage funds to capture quick profits. This attack is not about government's performance or discounts. It is about executing Saba's well-known playbook, buying controlling positions, and forcing short-term changes that harm retail investors to benefit Saba and its hedge fund investors. What is your response to that? And what do you do after these campaigns?
Yeah. You know, when I sit here and think, throw your best at me, Sonali. Like, they sent you a question, just please, like, give me your toughest question. I'm not here to be, we don't have some friendly arrangement. Ask me anything you want. I fear none of their questions because they're so absurd, okay? When they say that we're using some purported playbook to help investors in the short term, where is the long-term pain of making investors money? Usually when you say you have a short-term motive, there's a long-term consequence. Having the funds have investors have a chance to get out at full value, where is the negative in that? And I'm not going to use my words, okay? ISS, which is independent, okay, which stands to tell the small investor how they should view this kind of rough contest that, you know, that we're having. Here's what ISS said about this year, okay? The board is deeply entrenched. A direct intervention remains necessary. It is rare to witness a board so brazenly flout the most basic of shareholder rights in furtherance of their own enrichment. I'll read one more. The board actions are so grave that they would warrant adverse vote for incumbents in an uncontested election. What ISS has said is that even if we didn't run against BlackRock, they would have recommended against their nominees. That is literally how bad it is. And I want to just say, BlackRock's an amazing firm. They manage $10.5 trillion by last account. This might be big to us. This might be very big to our investors. This is tiny, small potatoes. And it will someday be a case study at HBS of a strategy failure. That for $5 billion of action, of buying back funds at a discount, including their own employees who would get to make that money, including their shareholders, that they would say, look, we actually care about you. We're going to treat you the way other managers are treating their shareholders. They wouldn't have this problem on their hands. They have amazing products, but for closed-end funds, they basically have taken the position, no one is going to tell us what to do, and we're willing to do whatever it takes to squash the rights of the shareholder, which is enshrined in the 40 Act. The 40 Act is there, the 1940 Act, the Investment Company Act, is there to protect small investors. They don't need the same protections in ETFs because you can vote with your feet. You can redeem a mutual fund. You can sell an ETF at NAV. But they are violating the Investment Company Act. Don't trust my words. A judge said it last year, and we won our case.